We have Kube. Is it Kube? How do you pronounce your name?
Cube.
Cube.
Yeah.
Nice to
Cube,
meet you. How
let's
you
go.
doing?
Nice to meet you.
Well, we're excited to talk about what you got going on here. Neobanking has been, talk of the town. Everyone's talking about neobanking here, so
Yeah.
you're in good company. Maybe you give us. We'll start with your background, Cube. Who are you? What got you into neobanking? And we'll get into it.
Yeah, sure. So I'm based in San Francisco Bay Area, and before starting Cypher 4 years back, I spent few years at a Y Combinator startup called Zenefits, then spent few years at Amazon, building Amazon's credit card business in partnership with American Express, built that product from the scratch as an engineering leader.
Nice.
Then spent some time at Coinbase leading risk engineering, as part of which Coinbase Card also was like one of the launches that we did as part of that. So that's what got me into neobank.
Okay, that's pretty much.
And
the
that's
perfect
why
background.
they said if you don't launch on base, come on, man, you're not
Yeah.
I guess.
Sorry.
Yeah. Is that why you chose to launch on Base, because you worked with Coinbase in the past, or?
I mean, honestly, I would say no. That's not the reason. Like, I think, we went live with this protocol this year. Obviously, we want to pick an L2 where like it's easy for users to interact with the protocol, right? And we thought like Base was the obvious option, given that the user activity has been ramping up in the last 18 months or so.
So, yeah, tell me a bit about this business. Maybe we'll start with a little bit of education for the people listening. Neobanks have been blowing up. I think we saw Revolt with a value of $80 billion, if I'm correctly, along with some other crazy valuations for other neobanks.
Revolut.
Oh, Revolut. Excuse me. Thanks for the clarification, Josh.
Yeah.
What is the size of this market? How many people are pulling this off? Like, how do you at Cypher get to Revolut and beyond numbers?
Okay, so when we started Cypher, the neobank and all these stablecoin banking was not even a narrative, right? But we still were absolutely bullish on this space, and I'll tell you why, and that'll kind of answer this question, right?
Yeah.
So let's step back a bit and talk about internet. Like, we had Walmarts and all these like brick and mortar commerce stores, right? Like multi-brand retail stores that were like catering to specific geographies. And internet came, and companies like Amazon took this online. And all of a sudden, it became like $1 trillion opportunity, right? Like, it was just commerce taken to internet, which unlocked like broken physical boundaries where anybody in the world can shop through e-commerce, right? That never happened in the finance industry. Like, every fintech app that you can think of today is like Walmarts of like pre-internet era, right? Like, if you look at it, like if you take any neobank, like even like Robinhood in the US is like very US specific. And then they had to go and specifically expand into Europe, right? Or UK, right? And like my biggest fascination in this space is like, I've been building banking integrations all my job in Silicon Valley before that. And it was always underlying infrastructure was tied to a central bank for a specific country. And blockchain and stablecoin is this infra where the underlying system by default is like global on day one. That pretty much unlocks, in my opinion, multi-trillion-dollar opportunity for companies to be built as neobanks, 100 times larger than what you've already seen so far, right? That's why I think it's like huge. The upside is huge, but I think the future is going to be way different than what we are looking at today, because most of the people are relating neobanks to just crypto cards, right? But crypto card is a very small fraction of that. The neobank opportunity here is the fact that you're removing all those intermediate systems that were being built over like decades. Like even Visa and MasterCard or even American Express was built in pre-internet era, right? So if you, as much as you like move away from all these traditional financial stack, I think it's going to unlock like true multi-trillion-dollar opportunities. And that's why I think the neobank is a very big space that I'm personally bullish on. And I think the market opportunity is like much larger than what we have seen. Like, for example, 20 years back, if you have gone to people and said Google will become like a multi-trillion-dollar company, nobody would have believed it, right? And I think we are in a similar space right now. We are potentially going to see $50 trillion, $100 trillion companies in this space.
Can I ask about why we're talking about neobanking now? Is it a change of regulation? Is it stablecoin proliferation? Like, why? Like, look, Monaco MCO coin, if anyone remembers this from 2017, which ended up becoming crypto.com, but they were doing credit cards. They're like the first to do credit cards, like crypto credit cards. That is like not a new thing. This has been around for now going on 8 years in crypto. Is this credit card with a crypto account? So Monaco became crypto.com, and then a bunch of others tried. And even in 2021 run, a bunch of others tried with Visa partnerships and stuff like this. Why today is this thing now a narrative where this is actually starting to work?
Yeah, like I love answering this question, and I'm going to share like some disclaimer. This is a trigger alert. So like one of the things that's happening is all of a sudden it's so easy to launch a crypto card, right? Like to your point, when Monaco and like crypto.com existed, right? Even Cypher early days, like Visa and MasterCard wouldn't even entertain a meeting with us, forget about working with us, right? Like, so all of a sudden this technology is getting commoditized, and anybody is able to launch a card in like few weeks, right? And definitely there are a lot of blockers to it, but like that's the perception that is there in like among the developer community, right? So anybody can become a crypto neobank and just launch it in like few weeks, right? And all of a sudden this app is downloadable everywhere in the world, and you can just create a card and go spend crypto in real world. That is an easy narrative to actually build. That's why you're seeing a lot of competitors trying to like just launch a card and just call themselves a neobank. But like that's one of the things that's like pretty dangerous for the industry altogether, because these are like pretty hard software engineering problems, right? Like even a lot of Uniswap and a lot of these early contracts that were built went through a lot of stringent security audits and all that, right? So now because of all this low entry barrier with neobanks, people are just launching a crypto card and calling themselves a neobank, right? And that's why we are seeing an explosion of this. And like the reason why we see so much attention around this is people are launching tokens with this promise of neobank as a narrative, right? And that is the only reason why we all of a sudden see so much buzz around this. But I think there is so much work to do. We have only scratched the surface. Any inventions that were required to build neobanks already existed in the form of stable coins and all that way before. Just that the regulations and the way to launch crypto cards have become very easy, but that's not what the real upside for a neobank actually is.
So I have another question around positioning. We see, if I think about all the banking / crypto apps, I have my normal bank account, which is with a major top 20 institution in the world. I have then a kind of neobank in the traditional sense. It's a Web 2 neobank, which does like automated investing and stuff like that. Then I have my Coinbase account. I have a Phantom and MetaMask wallet on my phone. Where do you guys sit in that spectrum of product? Like, is a neobank a kind of a mix of all these things, or is this like a separate category? And what makes it fundamentally, like from a technology standpoint, different than those others?
Yeah. So I'll tell you the biggest leverage, right? Before getting into what neobank is, right? I'll tell you the specifics of what leverage a company like ours have. Like Coinbase is an exchange, right? And exchanges are already pretty regulated, and it is tied down to traditional financial style country-specific regulations. So that's the reason why you don't see Coinbase live in like 200 countries, right? We built the non-custodial wallet first, which is the equivalent of MetaMask back then, right? So the moment you build any layers on top of non-custodial wallet, you're not bound to any of those local centralized exchange regulations. At the same time, any cards we issue on top of that is issued by Visa and MasterCard and the bank. So from a legal standpoint, or from a regulatory standpoint, we are just a technology company building a non-custodial wallet. Every other layer is just an integration, and each of these layers are taking the regulatory risk that's country specific, right? So the biggest leverage is just because you're a non-custodial, you get the regulatory arbitrage that is not caught up yet for DeFi yet. And then a biggest unlock is like the fact that you're global from day one, right? So that's actually the positioning. So the moment you start building the ecosystem around those building blocks, I think you'll end up building a completely different product. The easiest common denominator you can call yourself is like a super app of every damn app you just mentioned, right? But the future is much more larger, wider coverage on top of that.
This is great. I'm glad you shared that. That's the
Yeah.
key thing. Like we've seen Avicii kind of come out of nowhere. And look,
Yeah.
again, like I said, I've nothing new, but all of a sudden it retained. And I'm wondering like, what's the difference?
Exactly.
That's it.
Yeah.
So these are non-custodial, basically products with then, Visa and other services built on top. Sorry,
Exactly.
Dom, go ahead.
Yeah.
Yeah, no, when you have this conversation about neobanks, you almost, every time you talk about stable coins as well. Maybe I'm misinformed, but it feels like we're not seeing a lot of these stablecoin providers making a push into neobank. Like, why isn't USDC, or why isn't Tether? Why isn't DAI? Why isn't Athena? Why aren't they making pushes into the neobank arena when they have the stablecoins that people are already wanting to transact with?
So the reason why USDC and USDT wouldn't get into this space is they consider themselves like a platform business, right? They want builders to adopt their stable coins, right? So according to them, neobank is just one of the use cases, and they're looking to do value capture across categories of product. That could be like perpetual trading or anything you want to build on top of blockchain, right? Because stablecoin is like this base currency. So their game is into like how much more applications can adopt this base currency into their system, right? So that's their KPI in the business, right? And the reason why they do that is like, look at Tether, for example, right? Like more and more applications adopt Tether. There is more Tether in circulation, which in turn gives them more capital parked in their system, using which they earn interest and buy gold and a lot of crazy things.
They care about that treasury, US Treasury yield.
Yeah. And with the fact that we have this Genius Act passed this year, the fragmentation is beginning to build, right? I personally think in technology, fragmentation never scales. Fragmentation happens in early stage. At scale, it always like accumulates in like 2 to 3 companies.
Interesting. So Cube, you have the background. Let's talk a bit about Cypher now, and maybe some of the products you guys are offering specifically, and what sets you guys apart.
So what sets us apart is like, first of all, as the way the product is perceived today, we are perceived as a crypto card in the name of neobank, right? Let's first answer that question from that context. I don't think Cypher is only that, but still that's how we are perceived and that's how users use it for.
Okay.
To answer your question with this context, as like neobank and crypto card, what sets us apart is the fact that we have built foundation for this in the last 4 years. We have been shut down by banks. We've been like attacked with fraud. And I'll tell you what the consequence for the users are, right? This is not the first time we have seen these products, right? Like even 4 years back, we at least saw 10 different companies doing this, just like the way we are seeing it now. And most of these people were completely relying on the bank to manage the user funds, which means when the banks go down, there is this bank called Evolve Bank in the US that got into huge scrutiny with a lot of these no KYC card issuance in crypto, and they just took customer funds and they were dead, right? So from day one, we built our system in a way where every time we work with banks, like we trust the banks with $0 of our funds. We completely control the user funds, and banks, we only settle with banks when the money moves through Visa network, right? That's point number one. I think we are one of those very few companies who have like this operating experience, because non-custodial wallets plus that banking relationship is a completely new tech stack, right? That's one. And then credit card fraud is a huge industry. The moment you launch a credit card that anybody in the world can apply from, that creates your attack surface like 100 times larger. And I've seen this over and over again, even in my Amazon days, where we were US specific, we saw significant fraud. Now, all of a sudden, anybody in the world can download and create a card. So you're going to see like all kinds of attack vectors on you. So we have put significant foundation into like building those fraud systems, right? Because the biggest problem that I see in the infrastructure today is like all these companies who are launching APIs for card, they'll give you an API, they'll control everything, but if there is a fraud, they'll put the liability on you. That's a ticking time bomb for all these neobanks building on top of all the players, right? So what sets us apart is like the fact that we have built this system where we completely control the user funds. In fact, we are already in the process of moving that entirely to smart contract so that users actually can like publicly see where their funds are, so that no external authority is like controlling it, which is a big part of building a neobank on blockchain, right? If you're still plugging into like a traditional banking system and still calling yourself, we are spending, letting you spend crypto and call yourself a neobank, that's not a true neobank on blockchain, right? At least you're not leveraging the advantages the right way, right? Another important thing I'll tell you is like, we are one of those very few neobanks which have like publicly published security audits, right? Like when you're talking about a neobank, right? Like in traditional banks, if your money is gone, your money is still lying somewhere in the system. But in crypto, if your money is stolen, like it could just vanish it into the abyss, right? And like that's one of the reasons why security audits are super important. And like that's also one of the things that sets us apart. We have like publicly published security audits. Even the non-custodial wallet that we have, it's like open source and publicly audited, which means you can like assure that like there are stringent security audits that have proved that it's safe to park the funds here. So these are the things I would highlight in like what differentiates us primarily, or things that users should care about.
And I want to get into products, but real quick, let's talk about this question Jeet Sparrow had. He said, how can neobanking onboard non-crypto users? Really, the crux of his question is, you know, look, the idea is here. You guys clearly have a product that makes sense for a lot of people. How do we get this now into the masses' hands, right? That seems to be the biggest barrier for all neobanks, I think.
Yeah, absolutely. I think this is where it kind of answers the second part of what I said, right? People think the neobanks are just crypto cards. The real future is something larger than that. That will kind of answer the question that Jeet Sparrow was asked. So non-crypto users don't care about crypto for obvious reasons, right? So the key question here is, what fundamental leverage are you using in the underlying technology stack to deliver better value to users compared to Web 2, right? And I can draw a lot of analogies there, right? Like, for example, there were traditional taxis and Uber came in, and Uber like centralized all of this, right? The biggest advantage was that like you all of a sudden want to like quickly request, and from your location, the nearest taxi is like called, right? So it's optimizes for like faster request, right? And if you draw that analogy in like finance industry, right? Like I'll give another example, right? Like what if you want to borrow against your crypto holdings, right? And quickly like go on a vacation and come back and like repay that back, right? Today in like traditional world, like especially in developing nations, you're actually borrowing against your gold holdings where there's a significant origination fee, right? Another great example is like I bought my car in California for 1% interest rate, while the California borrowing rate was 7%, right? So when you start delivering this fundamental value that because of the fact that the California rate was set by federal government in the US, whereas the 1% interest rate that I did from a lending protocol was like just set by free market demand supply, right? When you take these Web3 primitives and productize for consumers, the only value that they're going to see is, hey, if I go to this guys, they're giving me 7%. And when I come to Cypher, I get 1% borrowing rate. Let me do this, right? And that's exactly what will unlock non-crypto users into this ecosystem. And that's why like we aren't done building true neobanks on top of blockchain yet. The true future is when you take all these Web3 primitives and like consumerize it in a way where users don't even know that there is crypto involved under the hood. Because all that a user cares about is like whether you can actually just get this loan or not, right? They're very transactional there as a user. Another important part I'll call out is like all this agent shopping experience that we are also experimenting on, right? Is like when agents start doing shopping on your behalf, for example, right? The fundamental payment stack with like card doesn't even work. Like you don't want to share your card number with a random software and like go let it like spend, right? So that's where smart contracts are the only way to do it. And that's also another leverage where like you're going to see a lot of AI companies. Like in Silicon Valley, I was at a hackathon at Y Combinator like 2 weeks back, where people are building amazing agent experiences and they couldn't figure out payment, and everybody's trying to use stablecoin, right? We are clearly seeing that future. So another important aspect to answer your question, the point where you're going to see significant consumer adoption is like we're going to see interesting consumer apps which will be enabled because of stable coins, which was not possible traditionally, right? And I believe AI agent commerce experience is a big part of that.
Do you I want to just double click on product real quick, because So when we had Ram and from Avicii on during their ICO, which has performed incredibly well, that's gone from 4 mil to $100 million.
Yeah.
Some of the things he was talking about was doing something like a credit ISO. Is it ISO number? I don't know, like some credit score.
IBAN.
No, that's not. IBAN is like the identifier from a bank. Anyway, some score tied to your credit worthiness for lending. And then on top of that, he was talking about like home loans and all these kind of like what I think are high margin banking products. But maybe you tell me, like, are those types of high margin lending products something that you guys might work on? And what do you think? Do you think a neobank can deliver those?
Absolutely, neobank can deliver those, but I would slightly change the perspective there a bit by saying.
And what is the credit number or credit thing that we're trying to think of? Do you know it? What we're talking about?
It's like, I mean, probably we're talking about some unsecured lending or something, right? Because
unsecured lending. That's unsecured
lending, right?
Yeah.
See, unsecured lending is a very American thing, right?
Okay.
I don't believe that unsecured lending is like something that should exist, and I'll tell you why, right? Let's talk about specific examples of unsecured lending. I, living in America, can go, you put my social security number, get approved for a loan based on my past credit score, right? And I don't repay the loan. My credit score gets impacted. So when my credit score gets impacted, when I don't repay the loan, doesn't mean they let go of my loan. They can still put a lien on my existing bank account, freeze my bank accounts, right? So every lending in the world is actually secured by something, right? One is like fake secure, another is like really secured, right? But in reality, you can never run away, right? So the concept of unsecured lending is a very American
FICO score. That's what it was. FICO score.
Yeah. Especially when immigrants come into America, they make you feel like, oh, you don't have a good enough FICO score and all this bullshit, right? Like, I don't agree that that's the right system to build, right? Like in the future, when you move everything to blockchain, and like you don't want some central authority to tell you whether you're credit worthy or not. There's enough data in the system to say that, and like don't believe anybody who tells you like unsecured credit is a thing, because end of the day you're always on the hook by law or something, right? So every lending in the world is secured, right? Just that whether it's financially secured and your assets are locked is the only difference, right? So to answer your question back on like how we think about that, like, see, this is where I'm waiting to see more and more Web3 primitives to go on blockchain, the real world assets, right? There are a lot of traditional financial institutions trying to like tokenize real estate. There is enough tokenized gold, right? As more and more traditional assets get tokenized, that's when neobanks can start building on top of that. For example, tokenized stocks, right? Just because stocks are tokenized, all of a sudden we as a neobank can enable stock trading as a global app instead of a country-specific app, right? This is a huge unlock in my opinion. So the way I think about this is all the mortgages and all these traditional financial systems will all be tokenized in real world, like on top of blockchain. And when we consumerize that for like through the neobank, I think the way it's delivered will be slightly different and way more consumer focused, because all these traditional mortgages, all these systems were built once again in pre-internet era, right? I don't think it's globally translatable. That's where the moment these assets are tokenized, we are going to see creative ways in which people will create mortgages. People will maybe create 100-year mortgages. People will maybe create 5-year mortgages, right? Today, you have to wait for the government to approve, oh, let me approve like a 40-year mortgage term and all that, right? So I'm waiting for those inventions to happen, and I think it's already happening as we speak.
Nice. Let's pivot here a little bit. We see you guys are top 10 in terms of crypto cards by volume with a token. Maybe talk a bit about these metrics. How are the metrics growing? What does growth look like? Maybe just give us a full breakdown here.
Yeah. So once again, all the metrics that people are covering here are only the crypto card spend, right? So most of the crypto card spend market is growing at like 10 to 20% month over month, right? I mean, I would say slightly larger. I would say 30% month over month. And all of the crypto cards in the market are growing at least 10% month over month, right? So trying to capture this market share here and there, right? So that's like kind of the average growth rate. But I think, and do you want me to talk about that in relation to the token, or just
the metrics for Cypher? So for instance, Avicii published that they're doing about $200,000 in spend volume every 24 hours. So just people are trying to crunch numbers here of like, how do we value these products based on kind of like those key business metrics?
Yeah. So that's a great question. So I would say this is where I would be very careful in like evaluating tokens, right? I know token has this big speculative aspect to it, narrative aspect to it, right? Most of these token are like if you want to do fundamental analysis on token, first read the white paper, right? Because these are not like publicly traded companies who have like financials published every quarter, where you have like apples to apples comparison on this is the EBITDA, this is the revenue growth and all that, right? Like you have to go deeper into like where the value capture is happening, where the net new value is coming into blockchain, right? One of the things that I would highlight is, for example, in Cypher, the reason why we built this protocol is not just for the sake of narrative. We could have done that 4 years back if we want to. The reason why we built a protocol is we want to like build something like Amex rewards globally, and then bring merchants into this equation. So merchants are spending multi-billion dollars in like building loyalty, right? Like in Amex Platinum in the US, you get $10 per month in credit. Just for the $10 month in credit, every Amex user in America uses Uber, right? So brands have seen loyalty that comes with these incentives, and we're trying to bring that into the equation. The moment you bring
Yeah, sorry, I totally agree, by the way, and I want to double tap into loyalty, but I think for the nature of the question in this tweet, it says last month card deposits and spends is 23 million for Cypher. I don't know if you can just elaborate if that's accurate, or I don't know where these numbers are generated from.
So even I don't know where these numbers are generated from, but I know for sure that the entire list here is actually like either guess or double counted here and there. So there is definitely inaccuracies in like all the numbers here.
This might be generated with ChatGPT, best guess.
Yeah. So I mean, the format looks like ChatGPT, obviously. It is actually
shout out to Centralize or Die, big fan of the show. So
yeah. But I think overall, like the ratio is like very relatable, right? But definitely, I would say like all the numbers here are inaccurate. The entire stack here is inaccurate. Yeah. To answer.
Okay, feel free to talk about loyalty. Sorry, that was a.
Yeah. Sorry, I deviated from the actual question. Yeah. So talking about loyalty, right? So the biggest upside in Cypher is going to be when like brands start buying Cypher tokens and staking Cypher tokens, because that will give you voting power in the system, right? And the way we are going to do that is like, with this voting power, you can decide how much emission goes into your brand as cashback in that, and which in turn will create buy pressure, right? Which is like an ad network. So when every brand in the world is trying to buy Cypher token for getting a partnership or like an ownership in the protocol, is actually the real upside here, right? So these are the metrics that the token should care about. Today, like there are 0 brands who do that, right? So when we launch the first brand, you should definitely pay attention to it. When we launch the 10th and the 100th brand, you should like absolutely go on this, because that's when the network effects will start kicking in, right? The moment we cross at 10, 100 brands, like you're going to see people competing to like buy Cypher tokens from the brand side, not even from an investor side, right? That's really bringing in net new value into the system. If not, just like crypto.com or any other token, you're just creating an inflationary token and just letting people dump on the market, right? I think the real alpha in any token exists in what kind of new models are you building, right? Because the market always adapts beautifully, right? Like for like few years back, it was so easy to like launch a token and just say, oh, it's going to be the next 100x token. So now people are figuring out that, oh, if there is a huge airdrop, there might be a short-term sell pressure and the market adapts to it, right? So I think the market is very good at adapting to it. And I think what you should care about is like all this other things that I mentioned, like security, what net new value is coming into this token, and why does it matter to the token?
I definitely agree with you. I do got to double tap here, because crypto Twitter will ask us just around like business metrics. So how many people are using the card, how many wallet users they are. I don't know if you know like how much money is in the system, like value, cumulative transaction value. Any numbers, like concrete numbers you can kind of share around those metrics?
So we have monthly 40,000 active users using like from the mobile and the D app, right? Together. We only track active users. We don't call registered users. That number is much higher. But like active people who are spending on transacting both the mobile app and the D app is like 40,000, right? Globally. And then in terms of total value locked, we are somewhere around like $5 million, right? And that's what we are trying to move completely on chain. and users can like earn yields potentially on a Morpho vault. So we are looking to like publicly, and that's when these metrics can be more verifiable. Today, like whatever I tell could still be a lie. The reason why I'm saying that is that's the way you should evaluate every damn crypto card there, right? So everything should be verifiable in crypto. So probably in like early Jan or like late Jan, you'll start seeing that. But today we have roughly around like 5 million in TBL.
And any metrics around like transaction volume? Like how do you generate revenue off that? Is it on transaction volume? Is it staking or a percentage of funds that are staked? Do you take a cut?
So as of today, like the different revenue sources that the place where the most of the neobanks are making money is on interchange, first of all. Like when you go swipe a card, merchants pay a fee. And according to me, that's a very low quality revenue, because in the future, this shouldn't exist. Like this coming from the Visa network, right? But the things that will continue to exist in the long run is actually Forex, right? Because when you're building a global neobank, there is always like Forex involved heavily, right? Either you're sitting on USD base currency and spending it all over the world, or you're sitting on EUR as a base currency and spending it all over the world, right? So these, and unfortunately, most of these neobank charges a predatory fee when it comes to Forex, right? Unfortunately, because this is relying on traditional infrastructure. The place where we are super bullish on is like when you move Forex also on chain, because you already have local stable coins. So a conversion from USDC to CADC should happen on chain, not from USD to CAD through a traditional bank, right? But to answer,
did you say CAD?
Yeah, CADC. I mean, I used to live in Canada before.
All right, same. So I was like, yo, the CAD made it on there. Let's go.
Yeah.
Actually, shout out to the Canadians. The Canadian banking regulators just enabled like stable coins through Stablecorp to even be legal, just like in the last couple of weeks. So
exactly, it's an amazing unlock. I agree. Yeah, I mean, like Canada is actually far better than America and a lot of financial infrastructure. The Interac itself is huge.
That is right. The Interac system is great. Also, Canadian regulators had spot ETFs. They had staking ETFs like 2 years before the SEC enabled any of them. So
I agree with you. It's like amazing. And most importantly, for card issuance in Canada, you don't even have to work with the bank. You cannot be a bank and still directly work with Visa and MasterCard. That itself is huge.
Yeah. Crazy. I mean, this conversation is wild. So maybe a bit on the product side. You guys have the cards. You guys are looking to make a push in the Forex space. Maybe give me a list of just products here to really send it home with all the listeners.
Yeah. So like the crypto card is an obvious thing. According to me, that's a commodity. Crypto card shouldn't exist in the next 24 months or so if what we are building in blockchain is true, right? So just calling that out. So the real thing you should watch out for is, first of all, like one of the integrations that we built is like with Hyperliquid, Moonwell. Moonwell is a lending protocol on base chain, right? So one of the things we launched was like, if you're a user who already has collateral position in Moonwell protocol, which means you have deposited your ETH or like CBBTC there, you can auto borrow by approving a smart contract and just go spend it, right? That's like true credit card, but your credit is coming from a smart contract collateral that you have put somewhere else. That's an amazing unlock for us, because like that's the true composability of smart contract, right? You as a user has like your collateral deposited in a different bank, and without even asking the bank's permission, just by getting the user's permission, we are able to borrow against it, spend it, and repay it within like 10 minutes with like zero origination fee. That's like a huge unlock, right? That's an example of an amazing experience that we already have, that consumers are using to buy like cars, properties in Dubai and all that, right? Point number one. So the next one that I think it's very important that you guys should pay attention to is X402. X402 is this agent-specific protocol that Coinbase and like few other players have like collaborated to build, where agents can pay each other. I'm personally very bullish on that, and we're building some integrations there. So we want to enable consumer experiences that were not possible otherwise. I'll give an example of that, right? Today, like, can you have an agent that looks at all your past, like I use Instacart in America, for example, for my grocery shopping. I hate grocery shopping. If there is an agent that looks at all your past transactions and does like planning for you and order Instacart for you every week, today you can build that agent. But can you pay using that agent? No, right? That's a huge problem. So that's the biggest limiting factor today. So what we are building is building that bridge so that an agent can go and do this list for you and also order on your behalf at Instacart by generating a one-time use card, whereas like the money will be approved through smart contract USDC, and instantly we move it to a card and like authorize it at instacart.com, because instacart.com does not support USDC, right? So AI is a very big theme for us in like Q1 and Q2 in 2026, right? So expect to see a lot of interesting consumer experiences globally that'll be only possible because it was built on top of blockchain, right? So,
and Cube, when you were at Base, were they working at X402 at that time, or did that come after you?
No, I was at Coinbase like 4 years back. So back then, Coinbase was not even an on-chain company. I quit Coinbase because nobody fucking knew about crypto back then. Everybody was building exchange. It was just building APIs, right? Like that's one of the reasons why I thought, okay, you should go build it on your own. But now Coinbase has transformed into an on-chain company. But like back then, like a lot of like, I hope I can tell this today, right? Like few of my bosses haven't even downloaded a crypto wallet back then.
Wow.
Right? And they were still like leading big orgs in like Coinbase.
Wild.
Yeah. I guess back then, 4 years ago, though, a lot was off-chain, to be frank with everyone.
Yeah,
I feel
DeFi, like layer 2s wasn't really a thing. There was no sort of DEX like, 2017, it was like Ether DEX, but that was unusable, really, to be honest with you.
Very true.
Can I, so X402, I mean, we had Pay AI on as it was like $3 million before it ran to like $80 million 2 weeks later. That's actually how the show kind of went viral a little bit. We were right on the X402 narrative at the very beginning. So you're saying by next year, what are we talking, Q1, Q2, maybe 1H, so first half, I'll be able to use Cypher with, put $1,000 worth of crypto on it and then go tell it to order me groceries.
Absolutely, yes. We are definitely building towards that. And these are the true experiences that traditional neobanks cannot enable, right?
And so that is, would you say every neobank will have that ability, or is that a Cypher specific, like competitive moat?
I mean, like, I think that'll be a competitive moat, like, because we are sitting right in Silicon Valley, where we are every week seeing like all the advancements happening in the model layer, people building agent. So we have the leverage where we'll be one of those early people to enable these experiences, right? Like, for example, I've had like coffee chats with people who actually even like created X402, for example, right? So to answer your question, that will be a competitive advantage. But that being said, like 4 years back, neobank was not a narrative. When we built it when it was hard. Now it's commoditized. So over time, every technology will get commoditized. But being early and like building it right matters a lot in like consumer adoption.
Let's talk a bit more about the company in terms of team, backers, roadmap. We'll start with backers. Obviously, on the screen right here, you can see the big backed by Y Combinator Science, a nice tag to have. Maybe tell us a little bit about backers and relationship there with Y Combinator and all that stuff.
Yeah, sure. So backers are like Y Combinator. Then we have Samsung Next Ventures, right, and a few other VC firms in like Silicon Valley. And I'll also highlight few angel investors like Balaji Srinivasan, who was an ex-CTO at Coinbase.
Cool.
Then Metakovan, like the guy who bought that most expensive NFT in the world, the Beeple NFT, in the previous bull market, right? So like,
I don't think he's loving himself for making that decision.
Yeah. I mean, every crypto person has a story like this to tell, right? That's part of being in crypto. But like we had a lot of angel investors who are like, who I've also worked with in the past here and there, right? Like there is another company called 0x People, which is like doing a social graph kind of mobile app. And he's an ex-CTO of Rippling, who I worked with at Zenefits before, right? So we had a lot of Silicon Valley folks backing us. And from a VC standpoint, like it's Y Combinator. Y Combinator is the same incubator from which companies like Coinbase and like Stripe, Airbnb all came from, right? So these are our backers. And I think I attribute a lot of our success to like, especially Y Combinator, because Y Combinator has this unique, I know a lot of people in crypto hate Y Combinator for the right reasons, but like the reason why I still believe Y Combinator is great is like it helps you think from first principles and not follow any narrative for the sake of it. That's when you're doing true inventions, right? They always help you create alpha, right? They help create companies like Coinbase early on, Airbnb early on. Back then when people thought, why the hell would I give my home rent my home to a stranger randomly, right? But Airbnb is a
totally.
multi-billion-dollar business, right? So Y Combinator is like really good at pushing founders to think through like new alphas.
Yeah. Dom, can you pull back the chart? I just want to talk about your token launch. You did it on Base, obviously. What was the structure of that? How did you launch it? And also, do you have an ongoing like airdrop campaign or something to drive attention to the product? And then maybe lastly, like we're and one of the first ICM / ownership token streams that existed. Have you thought about like what the token ties into the actual fundamentals of the business beyond just, it's kind of like a network effect token?
Yeah. So two questions, right? First is like, how did we launch? And the second is like, how do we tie the business metrics to the token, right?
Correct.
So I'll answer the first part of the question. I hate to answer it, but like the truth is that I don't think we did a great job in like planning our token launch. We thought it didn't matter because there is a lot of like conventional wisdom around, oh, this is how you launch a token, this is how you build a narrative, you have to go and do like higher KOLs and all that, right? We actually initially thought, let's just go live on a DEX and just figure out things later, right? But one thing we were very particular was like give a really good airdrop for our all early supporters, because there have been users who are using us like for the last 4 years, right? And we definitely did a lot of unconventional things, right, with the token launch. And like right before the launch, we got few weeks before the launch, we got few like preemption from few exchanges and all that, right? But even that, we had to say no to most of the things because we want to make sure like the airdrop is live. People early on try to like go through this free market range of, okay, people who want to dump the airdrop, finish dumping, and people who start believing in this try to get in early and stuff, right? But still we ended up going to like $200 million FTV. Our honest plan was to like launch in 10 million FTV, right? Honestly, but we never were able to do that. And like I said, I don't think we did a great job in planning that because we thought it didn't matter. Like how you launch, I know it's like, I personally believe like a school of thought of that, like if you try to follow a playbook, you're leaning towards mediocrity, right? Like you always have to find new ways in which you're like launching things, right? So to answer is, and I think we have already got past all that sell pressure with the like airdrop. Now we are going to line up few tier 1 centralized exchanges, right? And like all of that. So I think now is like the time to start paying attention to it. And there is like no airdrop campaign that is like lining up. But I think what should really matter is like understand the protocol better, right? That's where I'll try and answer the second part of the question, how this overall ties to the token performance, right? Like today, you as a Cypher user can earn Cypher token by either spending or referring, right? That's like without even owning a token, right? Just a user. That's like the inflationary part to it, right? And I'll talk about the other side of things, the deflationary part to it. So long-term believers can actually buy Cypher token, lock it, which is vote escrow model, right? And when merchants start coming in like and like bribing, you earn a part of this. And like big part of this plan, we've already mentioned this in our white paper, is like a part of the revenue will start getting routed to the VE Cypher holders, right? So which means it's almost like a shareholder. And another important part that you should look for is like actually as the spend metric goes up, more value gets generated, and it just kick back in the form of revenue share into the protocol, right? That's why like we are looking to move every aspect of the product on chain so that it's all very publicly verifiable. Clearly people are able to see that this amount of money that's like unspent, and this amount of like rewards that's being earned, and this is a percentage that goes to the VE Cypher holders, right? And I think one of the things like the two KPIs that I call is like important is like the TVL and then the transaction volume, right? Because both of these key metrics will accrue value in the token. Another very, very, very important thing is how many brands are believing in this, because the story we are selling to brand is that if you buy Cypher token, lock it, and keep voting for your own brand, your spend increases. Traditionally, they were putting in marketing dollars.
And sorry, what does the bribing to a brand actually do? Is it some sort of ranking in front of users in terms of like, it gets in the marketplace or something like that?
Yeah. Let me answer this from a VE Cypher holder standpoint. Like,
sure.
Let's say I own VE Cypher holder. Like I'm a VE Cypher holder, right? So every 2 weeks, I get to vote for a merchant, right? And based on the collective voting we get, we proportionally distribute cash back to these merchants. So if everybody votes for like Amazon, right? Amazon will probably get like 30% cash back, right? So what a brand can do is come and bribe the Cypher holders, which means for the next 2 weeks, I'll give you $10,000. Whoever votes for this will like split that $10,000. Okay. So which means the brand is influencing the voters for those 2-week period, which is very similar to how they do marketing campaigns by doing $10 Uber credit, right? The difference here is that the cashbacks in the form of Cypher tokens, right? The moment the brand sees that, hey, I put in $10,000 and I see increase in spend of like $40,000. When they start seeing this working, the first time, they don't even have to understand crypto until now. They just
right. So it's a cashback incentive, basically, that they're buying. Basically, they give you 10 grand. You go buy the tokens on the open market, give it as a cashback incentive, maybe something like that. And users go say, oh, I get 1% back if I go buy from, I don't know, Dom's store or whatever.
Yeah, they can do whatever they want. But I just want to like clarify a very important caveat to that. Like,
Please.
It's still coming from emission, right?
Okay.
The real upside comes here when the brands start realizing that, hey, traditionally we go and put in marketing dollars every 2 weeks or 2 months, right? It's always time bound. What they're going to see that instead of bribing, let me buy Cypher token and lock it.
Yeah.
So at any given point, you're going to see like X number of brands who are just bribing and X number of brands who believe in this long term and buy and lock Cypher tokens. So it's creating significant buy pressure for the token.
Yeah. And do you have case studies of this yet? Or is this kind of something you're just...
Yeah. Oh, we have amazing case studies because we have been live for like 3+ epochs right now. According to us, epoch is every 2 weeks. And like we have bribed on behalf of the brands in the first 2 epochs, for example, to create case studies. We're already in conversation with a couple of brands, showing them, hey, look at this. You don't even have to understand what crypto is. We're just showing them the future of like, okay, today, you as Uber have like presence in 60 different countries. You can no way go to a single financial institution and target users in 60 different countries. Cypher is the only place in the world where Uber can go and put bribes and target users in 60 different countries that they're live at, right? That's one. And clearly case study showing that just because there was additional cash back for Uber, there is an increase in spend. So here is the ROI, right?
Got it. Let's work towards wrapping up here shortly. Yep. Maybe I don't think we got a breakdown of the team. I'm not sure who you have working with yourself, but maybe a little breakdown of the team, and then we can go into future plans and what you're most excited for.
Yeah, like I'll be very proud to say that we are like one of the smallest team for a neobank. We are like 7 engineers all together. Like people are just sitting here right beside.
Yeah, I saw that. I love it.
Yeah. People are just shipping stuff for the users.
Hey guys, keep working hard. Keep working hard.
Yeah, and like rest of the folks are like traveling and stuff. But like we're just 7 engineers, and then we have like 4 other folks doing like BizOps and stuff, right? I'm a true believer that if you're building, even before AI came in, the fact that you're building on smart contract is a huge leverage. Whatever took 100 engineers for me at Amazon should take only like 10 engineers at Cypher because of the fact that you're building on blockchain. And today with AI, I think we are like overstaffed, honestly, right? So I think true leverage in building a future business like this should be like less than 10 engineers sitting and like building stuff. Every function of the business should become an engineering problem with AI. Content creation should probably happen through generative AI, right? So because a lot of neobanks who boast that we have like 200 employees and all that, like for God's sake, if you're building a software company, don't boast about the number of people. Like when you're building software, you're building a mission that runs by itself, right? You shouldn't say that I need 200 people to build this mission. Like in today's world, the price of building software has crashed to zero, right? So you should rather showcase saying that we only have 7 people, but shipping like multi-million-dollar value in like product.
How's productivity? You have, I mean, your team, it seems you have a little office in San Francisco here. You got your team working in the same room. Productivity, I mean, 7 people, lean team, trying to pump out a bunch of stuff. You're probably all on the same page. How is productivity for you guys?
Productivity is like amazing, right? Like we don't even have meetings, right? Like when I used to work at Coinbase all day long, we used to like debate on what to build and what not to build. Here we don't have those conversations. People just go make decisions, like talk to users and write code, right? People are like, every engineer is spending time in Discord channels, right? Like whenever they get time, we figure out like some feedback, go ship it, right? So I'm so passionate about this. This is exactly opposite to what I did at Amazon and Coinbase. We had like everywhere like there, my incentive was to like, oh, you become a director if you have like 50 engineers working for you. Here it's exactly the opposite. I'm so proud that I only have 7 people working, super passionate about this. And all of them have been in this since 2022. They have been through FTX. They've been through like all this shit, right? And they still are building this with all this energy. And I think people should care about this.
Well, it's impressive. I don't even think I've seen your engineers get up to like go to the bathroom at all. So like they are getting work, man. I love it.
Maybe one last thing I have a question about. You have a low float, high FDV token. You also mentioned you're kind of a legacy team from 2022. I don't know what your funding situation is like. I don't know if you can elaborate on, I guess like who owns all those tokens? Is it the team owns it? Is it set for marketing use cases or emissions rewards?
Little tokenomics breakdown.
Yeah, give us a little tokenomics breakdown. Ownership tokens. Are you going to give some equity holdings to those people? I don't know. Anything really.
Yeah. I mean, this is all very publicly available in our white paper, and like soon this will be locked into smart contracts. The entire team owns 10%, right?
Yeah.
And it's 4-year lock-in from TGE. Though we have been working on this for the last 4 years, every team was okay to say that I'm in it for the long run, right? Which is a big deal. I've seen a lot of teams, we've been working in this for like 4 years. We want to cash out, right?
Yeah.
Like nobody in the team cashed out even a single dollar, like couldn't actually. Yeah. And there's also good tax reasons when you're in America, right? So the first unlock happens only on October 5, 2026. And from there is like unlock for like 3 years from there, right? So that's 10%. And then 25% is treasury, right? And just making it very clear, we raised $0 from the public.
Oh, really? Wow.
We didn't do an ICO. We didn't do like a token sale or anything, not even to investors, right? Yeah. We were very particular about it that because we have been building this business for the last 4 years, we are profitable, right?
And good. Congrats, guys.
And that's a leverage in being a small team, right? Like, so that's a advantage we have, right? That being said, big part of our overall FDV, like around 40% is like going through a 20-year emission, right? Because like the way this mechanics is built is like over time the price appreciation happens, and like people get more cash back as they go, right? Very similar to how Bitcoin happened. Of course, it's like a hard assumption, but we are setting ourselves in a direction where everybody will succeed only if we build the business fundamentals right.
Got it. Maybe as we wrap this up here, give us just a vision of the future. What are you guys most excited about? What are you heads down working on right now that should be coming soon and the people should look forward to?
People should look forward to like try more like AI agent experiences through Cypher. Like one of the things that we are excited about is the future of Cypher is not a mobile app, right? So we are at a moment where the consumer experiences are going to radically shift from where we are today, right? So maybe like one of the things you should look for is sometime in Q1, you should see some chat interfaces where you can just interact with your like blockchain wallet. It will like create some smart contract transactions for you and you just sign it once it's ready, right? Instead of going through multiple clicks, trying to figure out what the heck bridging is, what the heck like cross-chain is and all that, right? Another thing to look forward to is like agent e-commerce experience on top of Cypher, right? These are the things that we are personally very excited about because this is like a net new alpha we are building into the industry altogether, right? Not just in crypto, in the entire world, because enabling these experiences are dependent on innovation in crypto. And we believe we are in the cutting edge of doing that. So look forward to that in Q1.
Well, we will. Cube, it was a pleasure talking to you, picking your brain. I think you guys have a great vision here. So
thanks for sharing a deep dive. I'm sure the holders will love to hear it.
Yeah, thank you so much. Amazing conversation. Yeah.
We'll get you some clips as soon as possible. So take it easy, brother.